This is Business Edge. I'm Tolulope Adeleru-Balogun. The macroeconomic indices of trade partners and major disruptive events are greatly affecting the microeconomic realities of African countries. The cost of fuel has been the most visible of all of these. At present, the aviation sector in Africa's largest economy may be on the verge of collapse. We'll look into what's happening there. We'll also check on how the local and international stock markets have been performing. Let's start with the African business headlines. We start in South Africa, where truckers protesting against the hiring of foreign nationals as drivers have blocked key routes to Durban, South Africa's biggest port and the commercial hub of Johannesburg. And this has prompted a body representing the nation's road freight industry to seek President Cyril Ramaphosa's intervention to find a solution to the repeated closures of arterial roads. The highway's link to the port of Durban is also key to shippers from many African countries, including the Democratic Republic of Congo, Malawi, Zambia, and Zimbabwe. The repeated disruptions may have cost the economy around 300 million rand. The Central Bank of Kenya received bids amounting to 19.4 billion Kenyan shillings at the weekly Treasury bills auction, a performance rate of 80.80%, with the state fiscal agent accepting 18.2 billion Kenyan shillings out of the 24 billion Kenyan shillings on offer at this week's auction. The most attractive instrument was the 364-day Treasury bills, which received bids worth 8.9 billion Kenyan shillings out of the 10 billion offered, a performance rate of 89.98%, with the CBK accepting bids worth 7.9 billion Kenyan shillings. And staying in that region, Tanzania has imposed a new requirement on grain traders to get an export permit before shipping maize into the country. The policy shifts that has locked already bought stocks of grain by Kenyan millers at the border. Millers say the new requirements could paralyze their operations at a time of grain scarcity, and while other costs of production have pushed the price of flour towards 200 shillings for a 2-kilo packet. Millers say the requirement was not there before the two countries had ended up resolving their their trade dispute last year. And Morocco has urged Saudi Arabia to contribute to a fund to encourage investment, hoping to benefit economically from the Gulf monarchy's close political ties. Due to drought and imported inflationary pressures, Morocco's GDP is predicted to drop to 1.5% this year from 7.9% last year. At the opening session of a joint Moroccan-Saudi Committee on Bilateral Cooperation, Foreign Minister Nasser Bourita said that the fund, which has yet to be activated, has received a first contribution of 15 billion dirham, around $1.5 billion, from the state budget, with the remaining funds coming from national and foreign contributors. Again, welcome to Business Edge. The conversations are getting started right after this, and we're hearing reports that 3 Nigerian airlines could be on the verge of closing down because of the high cost of fuel. We'll get into that story right after this. While the International Air Transport Association has said that the African aviation sector is picking up pace and recovering from the COVID-19 pandemic, all is not rosy in the skies above Africa's largest economy. 3 local airlines may shut down operations in Nigeria due to the high cost of operations, as the cost of Jet A1 or aviation fuel has hit 710 naira per liter in the country. The vice president of the Airline Operators of Nigeria, Alan Onyema, shared this possibility at the ongoing Federal Airports Authority of Nigeria National Aviation Conference. The repercussions of the high cost of aviation fuel may not be limited to just 3 airlines. While the fuel crisis is not limited to Nigeria, there are a number of factors that have made the situation much worse in the country. But the prospects for Nigeria's aviation industry are good. Analysts have projected that Nigeria's passenger traffic will exceed that of the global aviation sector, with about a 7% growth rate in the next 10 years, while the global industry average will remain around 5.3%. And today we're looking at how fuel costs are threatening Nigeria's aviation sector. Joining me now is Dr. Alex Nwuba. He's the president, Aircraft Owners and Pilots Association of Nigeria. Dr. Nwuba, thank you so much for joining me. Welcome to Business Edge.
Thank you, and I'm glad to be on the stage.
All right. So let's just go straight to it. What we've seen in the past few weeks is the price of jet fuel, not even weeks, in the past few months, because some of this crisis we've seen reaction in action as far back as March. But the price of jet fuel in Nigeria has reached a crisis point that could really destabilize the entire aviation industry. So what factors have brought the industry to this point in time?
Well, the real fact is that the exchange rate of the dollar has been going up, and we're buying this product in dollars. The war in Ukraine has been a major factor because a lot of the jet fuel comes from Russia and Ukraine. And so all of these dynamics working together have increased costs, where fuel used to be 40% of airline operations, it's now about 80 to 95%.
And we saw just a few months ago the airlines attempting at some point in time to raise the ticket prices in order to be able to, find a way to balance themselves. So if the aviation fuel is getting to be 80 to 90% of their costs, what is the profitability right now for Nigerian airlines?
Well, most airlines are subsisting. They're not really making money at the present time. One of the things you have to be aware of is that not all airlines operate in the same manner. Some are using larger fuel-consuming airplanes, some are using smaller ones. So your fuel consumption varies according to the type of aircraft and the operation you're conducting. So some of the airlines using the much larger aircraft or the much bigger aircraft are having much greater pain than some of those that are using much more modern fuel-efficient airplanes. But the prices have gone up significantly. The airlines have in the past tried to raise fares, but they also understand that raising fares beyond a certain point would cause their customer revolt, and that would reduce their further deepen the problems they're facing at the moment. So you can't raise fares too much because the number of passengers will drop off, but you also have to raise fares to cover your costs. And this is the dilemma the industry faces today.
Very true. So let's go to some of the statements by the Vice President of the Airline Operators of Nigeria. So he says at least 3 airlines could be on the verge of collapse because of the high cost of fuel. Do you agree with his assessment looking at the state of Nigeria's airlines right now? Is it a potential for collapse? And is this actually really to be put on the aviation fuel crisis? Or as you said, some of these airlines have been subsisting even before this pandemic and the Russia-Ukraine crisis.
The Vice President of AON is very right in his prediction. I think he's actually quite conservative. A lot more airlines may be affected by this. The reality is that costs have gone beyond control. Not only do we have high fuel costs, we have high charges by the various regulatory and airport authorities. You have high service demand. Imagine that you get off an airplane and you get on a bus. That bus is driven by diesel. Diesel prices are rising just as fast as jet fuel prices are rising. Or you take a bus within the airport, or you have a truck push back the airplane, or load your baggage to the airport. All of these companies are consuming diesel in addition to the airlines consuming jet fuel. So everybody's cost is rising. Service providers to the airline industry are passing their costs to the airlines. The airlines are absorbing a lot of these costs along with the fuel cost and are not able to pass these costs to their passengers. And that's what puts the entire industry at risk.
So beyond that, so I want to just stick to that point. Was it this risk or this potential of collapse present before this situation? Because there have been some criticisms of the Nigerian aviation industry in terms of the potential of airlines to actually be quite profitable. The issues around the charges, as you mentioned, the regulatory issues, those existed even before the pandemic.
Absolutely correct. The airline industry in Nigeria has been under tremendous stress for years. We've seen the rapid turnover of airlines that will last around maybe 10 years and drop off for a number of factors. these factors existed before these fuel crisis. The fuel crisis essentially exacerbated and accelerated the challenges that the airline industry faces. So there were problems before, but the problems have gotten worse. The airline industry has tried to find a way, including asking the government to intervene in subsidizing fuel costs so that flying remains affordable for the general public. The concern of the industry is to ensure that this essential service, we have to look at aviation, it bridges time. People can go by buses, we accept, but the fact remains that airplanes allow you to go about your business much faster, allows you to handle perishable, dangerous, very important and valuable goods as a means of transportation. It brings investment, it develops economies, it does a few things. So the industry is saying costs are getting out of control. What can the government do? The government interceded at some point by offering direct supply of jet fuel to the airline industry. That kept costs at bay for a while, but prices are rising around the world. They're not rising as a result of what's happening in Nigeria. So prices are rising around the world. The dollar is rising. Costs are increasing. We're all trying to save an industry that is essential for the growth and development of this economy.
All right, so you did mention one of the options, in which was government stepping in terms of the cost of the fuel. So let's look at a few options. It's also been said that if the federal government was to give license to the industry could import the jet fuel itself, and this might be able to sort of cut out a bit, maybe a few naira here or there. And then again, as the option in terms of the government approving the sale of about 100,000 tons of jet fuel at 580 naira against what is now the going rates. You said that worked for a while. Is that still a potential option going forward in the next few weeks as we see how these fuel prices continue to rise? And importation directly by the industry, how much of an option is that?
The government providing reduced price of jet fuel is a stopgap measure. The government can also authorize some of these modular refineries operating within Nigeria to start to authorize them to start to produce jet fuel. They're essentially restricted mainly now to producing diesel. So since this is an import-dependent product, we're going to face these challenges until we address some of our core fundamental issues. The Dangote refinery will be on stream later in the year or next year, so we've got to bridge it. The essential demand here is how do we bridge the challenges? On the issue of airlines importing jet fuel, that's where I disagree with some of their assertions. The fact that the airlines themselves get the permission to import the jet fuel will not lower the prices because these are internationally determined prices, and there's not much of a markup in this industry. And the challenge has always been for aviation that the profit levels are very marginal. They're single-digit profit margins in this industry. Some airlines operate on 2 to 5% margins, and so when your costs triple, double, and triple, essentially all opportunities for profit is completely wiped off. So at this point, it could be said that airlines like Air Peace are providing a public service with no reward, and for us citizens of this country that want to continue to enjoy these benefits, we've got to come up with ways to support them in these very tough and trying times, which will last for some time. Provide some bridging solutions, which, like we said, some form of subsidy to the airlines. People have argued against interventions, but here is one out of necessity to support this industry through track times, while we put in place much more important mitigants in going into the future, like I said, allowing modular refineries to operate, improving our model of doing business, which is exporting crude oil and importing jet fuel. However, localizing that industry within the economy so that we wipe away some of the cost factors that are keeping the costs high for the airline industry.
All right, so Dr. Nwuba, just hold the line. We're going to go on a break. You've mentioned in terms of subsidy and even a bailout, and we saw something in that regard because of the COVID-19 pandemic. So we look to see how that played out, to see the potential of another one coming forward. And the costs are rising, not just for aviation fuel. It's not the only commodity that has witnessed a price hike. The cost of diesel per liter is expected to increase from 800 to 1,500 naira within the next few weeks. Where will jet fuel be coming in the next few weeks as well? We'll follow up after this. Still with me is Dr. Alex Nwuba, President of the Aircraft Owners and Pilots Association of Nigeria, as we look at how rising fuel costs are threatening Nigeria's aviation sector. Now, Dr. Nwuba, I have to ask this. Right now, a liter of jet fuel costs around 710 naira, and we've heard, of course, that diesel and all other attendant things are rising, and it could go to about 1,000 naira in the coming weeks. I want you to paint a picture for us. What would 1,000 naira per liter of jet fuel mean for Nigeria's aviation industry? What would happen?
It's what we have described earlier as the imminent collapse of the entire aviation industry. With these kinds of prices, nobody will be making any money. And this is a very tight business. The airlines may have to reach out to borrow funds to keep their operation going. And as we know, interest rates in the local economy is at double digits. So borrowing money at double digits, basically to bridge a problem that has no expiration date, will be a real challenge. And so in the past, the airlines have said, look, we'll down tools until situation improves so that we don't get ourselves in a bind and have overdrafts extended and wipe out our balance sheet. So it may be a consideration for some airlines that they would simply down tools for the short term until the situation improves and they'll return to service. And that would put pressure on the economy. And like I said, some airlines are better able to mitigate this challenge because they're operating much newer, much more fuel efficient airplanes, or they're operating turboprops that have very much lower fuel consumption levels. So these options remain available, but no airline is going to deliberately fly and lose money to the point of bankruptcy. So it may be like the airlines had said earlier, that some of them will simply have to down tools for some time to prevent a collapse of their business.
So you did mention subsidy and bailouts earlier, and we know that the federal government released about 5 billion naira for the aviation industry in January 2021 as part of COVID relief measures. And it was said that 4 billion went to airlines, with 1 billion going to other allied service providers like the ground handling crews, caterers, and small businesses in this particular value chain. Was that bailout of much help? And do you think we're at a situation now where the federal government needs to look at a potential bailout for airline operators in the country once again?
Well, the 2021 bailout wasn't enough to address the issues of the industry, but they helped. There's no question about the fact that there were no passengers flying due to COVID, and the airlines had to keep operating to provide much needed medical supplies, etc. It was necessary for the government to bail the industry. And when we say bailout, we're not saying they gave them money to have a party. They gave them money to pay salaries, pay overheads, pay all kinds of related costs of doing the business. And we find ourselves very much at that same type of period now, where the government necessarily must provide some kind of support to the industry to carry them through these very difficult situations. Bailouts are not new. Bailouts are not unique to Nigeria. We've seen the trillions of dollars in the U.S. put into COVID bailout, and probably will put into other mechanisms to support the economy. Bailouts are essentially to support the economy, to make it possible for people to go about their business without increasing costs. The danger of that, of course, is ensuring that these funds are used for the purpose that is intended. And so we're seeing potentially a position where either the government bails out this industry or it allows it to shut down for some time and people look for alternatives. The challenge with alternatives in Nigeria, and I'm not speaking globally, the challenge in Nigeria is towards travel is not safe. We've seen all of the incidents of kidnappings, of large-scale capture of people, killings, and related things. So that's what essentially brings about the necessity for some type of intervention, that the only safe way of traveling within Nigeria at the moment is by air.
Okay, so let me ask this, because maybe this is not necessarily dependent on this current situation, but we rarely see a conversation around mergers of airlines here in Nigeria. And that's something we see off and on across the world, the potential for mergers to be able to sustain the business and continue to provide this service. Do you think it's something the airline industry needs to look at? And as we've said, this situation is not just affecting Nigeria alone. Are there solutions we're seeing internationally that you think might be able to be replicated in Nigeria to at least give the industry some kind of lifeline?
The advent of mergers essentially is to create greater business operating efficiency. So when you merge, you reduce some costs across the board that are being expended by multiple companies. And so a merger in a situation like this would be to reduce staff costs, reduce overheads, reduce building costs, reduce many of the maintenance related costs, etc. But in this situation where the factor is a product like jet fuel, which goes into the engine, regardless of your size or scale, mergers is really not an option. That business survival strategy would not work in the situation we find ourselves. The only solution today is for the government to make fuel available to the airlines cheaper than it is at market price, or essentially for the airlines to shut down and wait until the situation improves.
All right, finally, Dr. Alex, that's the question I'm going to put to you now. We know that there's an ongoing conference that's organized by the Federal Airports Authority of Nigeria. This is a large part of the conversation, as well as the sustainability of the aviation industry. We're seeing the rise. We're looking at probably 1,000 naira, probably in the next week or so. But just give us a prediction in terms of what you think will happen. Will the government step in? Will we see a downing of tools? You've said many of the airlines have said that's their only possibility. In a week or two, without, as you said, a situation that has no expiration date, what do we expect?
Okay.
I need a crystal ball. A crystal ball.
This is a role usually left to great men of God to predict the future. But I think that in the short term, prices will continue to rise. Some airlines will find the necessity to scale back their operations, basically scaling back their operations. The government may find the need to intervene, but it's difficult now when the focus has changed to politics and preparing for an election. So I don't know who's sitting at the steering wheel, turning the steering and the wheels at this moment, and that's one of the jeopardies we find ourselves in the timing of this event. So basically prices will rise. We know prices will rise. Without some form of intervention, some airlines will be forced to scale back, not necessarily suspend all operations, but scale back their operations. But nobody's about to fold their arms and see the business plunge into the abyss.
All right, so we'll leave it at that for now. Dr. Alex Nwuba, thank you so much. And I know we'll be talking to you in the coming weeks as this situation continues to develop.
Thank you for having me.
All right. And it is one that we're watching very closely. As the ongoing conference in Abuja has said, the aviation industry is quite critical to Nigeria's economic development, but it is being threatened by the high cost now of aviation fuel. And it's not like anything else that's not happening around the world, but the solution could be in the hands of Nigeria's government. What will they do if there are airlines that decide to down tools or even scale back their operations? We'll watch this developing story very closely. You're watching Business Edge. Lekan Onabanjo is standing by with the international business news right after this.
It's time for international business news, and we start off in Europe. My name is Lekan Onabanjo, by the way. Now, European gas prices have rallied significantly over the last week. The strength in the market has been driven by reduced Russian flows via the Nord Stream pipeline, while the LNG market is also tighter following an outage at the Freeport LNG export terminal in the US. The European gas market has been looking as though it was in better shape. Storage was filling up at a good pace, which saw the gap in inventory levels narrowing significantly to the 5-year average. This, in turn, saw prices coming off from the high levels following Russia's invasion of Ukraine. However, it changed abruptly this week. TTF prices have rallied by around 50%, which has taken prices back above 120 euros per megawatt hour, levels last seen back in early March. Now, Berlin-based fintech Upvest has raised $42 million in a Series B funding round, claiming that it is one of Germany's largest this year. Besema Venture Partners is leading the round with participation from existing investors, ABN AMRO Ventures and Early Bird, including 5 others. Upvest says the funds will be used towards building out its investment API, expansion plans and hiring talent. Upvest claims its API and core banking system help challenger banks and other banking players to significantly save on their cost side, since they do not need to develop their brokerage and custody infrastructure from scratch. With the latest round of funding, Upvest's total investment to date stands at $62.6 million. And away from that, we tell you that Glencore, the Anglo-Swiss multinational commodity trading and mining company, says first half profits from its marketing operation would exceed what it would normally make in a good year as it continues to benefit from surging commodity prices, particularly coal. In an unscheduled update ahead of the interims in late July, the miner said adjusted earnings before interest and tax from the business world exceed $3.2 billion. The mining major headquarters in Switzerland said it had also been affected by the dislocation in energy markets over the year to date, resulting at times in record pricing differentials. These translated to a portfolio mix adjustment from $82 to $86 per ton from $32.80. Walmart Incorporated has announced that it would increase the average pay of pharmacy workers to more than $20 per hour and offer more frequent and automatic pay rises as part of a new progressive wage model to address a tight U.S. domestic labor market. The raises by the country's largest private employer will be offered to more than 36,000 Walmart and Sam's Club pharmacy technicians beginning this week. Starting pay will remain the same, however, ranging from $15 to $22.50, with certified technicians starting at $16.50 and higher. The announcement marks the second pay increase over the past year for Walmart technicians who last received hikes of at least $1 to their base pay in August 2021. And finally, crude oil futures in Asian trading hours on Friday were slightly lower, although largely holding on to the gains after rebounding from two-week lows in the previous session. Front month August, ACI Brent futures were trading $119.65 per barrel compared to Thursday's settlement of $119.81 per barrel. At the same time, July NYMEX WTI was trading $117.40 per barrel versus Thursday's settlement of $117.59 per barrel, while the more liquid August 22 contract was trading $114.52 per barrel. And that's all we have for you on international business news. Now, following the trends that we have observed, many economies are attempting to tackle rising inflation rates with interest rate hikes. So we are wondering, are these effective, or do you think this will actually add to the woes? So after this break, let's see how some markets have fared and how they are responding to these. Stock market update is up next. Welcome to the discussion on stock market update, and joining me to break in the realities of the bulls here and on the international market is Azeez Lawal, MD TrustBanc Asset Management Limited. You are welcome, Azeez.
Yeah, good afternoon. Good morning. Thank you for having me.
Good morning to you too. Now, the latest inflation figures seem to be impacting the market already based on what we have observed. But then tell us, will this trend last beyond this week?
Yeah, thank you for the question. Yes, so, typically when inflation data comes into the market, what typically happens across markets, including fixed income and equity market, is that portfolio managers try to readjust their portfolios such that, they try to manage the negative yield on the investment of their investors. So, so we have seen initial reactions because of that movement of portfolios. The market is in decline, and we have also seen sell-offs in the fixed income market, just like we have seen declines in the equity market. So we are seeing initial reactions, but typically this initial reaction, they are usually short term. So in the long term, the impact would typically be deeper. Thank you.
All right. Now, according to reports, Azeez, a number of quoted companies are said to be declaring dividends. Well, some might be more than others at this time, but then we are wondering, could this actually serve as a boost for the bourse, and could that also bring in more investors?
Yeah, thank you. I mean, typically, dividend is what you get on your investment, is the returns on your investment. So, I mean, that's a good thing for everyone, right? So it's the same thing in the investment world. It brings more investors into the market. So we have seen in the last couple of weeks now, we've seen UACN declare dividend and pay dividend. Total is also going to pay dividend. But typically, this is not the normal dividend season. The more dividend announcements will come from July. And I mean, the general impact as far as dividend announcement is concerned is that it brings more investors into the market. So we expect that particularly from July, we'll see more activities in the equity market because of dividend declarations. Thank you.
All right, so Azeez, based on your observation, do you have any predictions for how you think the market will end this week? Are there any positives, anything that we should look forward to?
Yes, sadly, there are none. The market has been very quiet. As we speak now, the market is down by around 0.2%. We expect that bearish trend to persist for the rest of the day. So we still see the market closing in red today, sadly.
So what about the fixed income markets? Do you think there will be any form of development in there? And of course, what do you think the impact will be on the economy?
Yes, you mean the fixed income market, right?
Yes.
Okay, yeah. So the fixed income markets, aside from the daily activities that we're seeing in the secondary markets, what looks like will impact the economy in terms of signals is the Treasury bills auction. So the last Treasury bill auction, I mean, the expectation was that, I mean, rates will still inch up, but rates came down at the far end of the curve by around 35 basis points. So the signal that one is sending is the fact that rates may be heading downward. So typically, when rates go down in the fixed income market, I mean, it typically positively affects the economy because it sends signals that, I mean, you can go to the bank and borrow cheaper to do your business, which is good for business and the economy. Thank you.
All right. So, Azeez, we understand that inflation is something that's affected almost every country in the world, and the United States is also reeling from that impact, even as the Federal Reserve has hiked the funds rate by the most since 1994, as the central bank of that country seeks to tame inflation. So tell us, what impact do you think that will have on the economy?
Thank you for that question. I mean, typically when Fed officials or central bank officials globally, when they hike rates, it's basically to tame inflation, like you rightly noted. At the same time, they are trying to tame this inflation without necessarily tipping the economy into a downturn. But the reality is that the signs are already there, and they are even becoming clearer by the day that the US is going to go into recession. It's just a matter of months. So sadly, typically when you hike rates to tame inflation, borrowing cost goes up. When borrowing cost goes up, doing business becomes more difficult. When doing business becomes more difficult, the economy suffers. And in this case, the economy suffering means recession. So what impact will it have on the economy? In the long term, the US is going to go into recession. In fact, the signs are becoming very clear by the day. Thank you.
All right, finally, Azeez, well, it seems that impact has been felt around as the Dow lost about 700 points. And on Thursday, it fell below 30,000 levels, while the S&P 500 and NASDAQ slid 3.3% and 4.1%, bringing all three major indexes to levels not seen since the late 2020. So finally, tell us, could bearish trend worsen, or do you think it's just a temporary reaction?
It's not a temporary reaction. It will worsen definitely. Like I noted in my earlier response, that the economy is going to go into recession, largely because rates have been hiked. When rates are hiked, borrowing cost goes up, and when borrowing cost of companies goes up, what it means is that their margins will reduce. So the investors are already pricing that impact into the market. That's why they are selling off. They are disposing what they have in their position, basically to take their loss now, move forward. So, I mean, that trend will persist, and it will persist for a very, very long time. So the dips that we have seen now, they will surely go deeper.
All right. Thank you so much, Azeez Lawal, for joining the conversation. All right, so definitely it's a common knowledge in the business world that inflation has become a global crisis. As a matter of fact, many countries in a post-pandemic era are coming up with different policies to stave off the impact, keep afloat, and of course, stabilize the economy. Even the United States is reeling and putting in different measures to actually insulate itself. The Russia-Ukraine crisis is a big threat to world economies, I must tell you. So, Tolu, I'm just wondering, of course, it is trying times for economies of the world. And do you think that the hike in the interest rates is some sort of a stopgap, or you think it's more of a holistic approach to dealing with inflation?
I think it's a realistic approach for now, but I'm not sure as to how long it's going to be able to work. How many times will interest rates have to go up to address this? And many are shouting that the world is entering the stage of stagflation, where it's just going to be difficult to get any positive growth numbers across the world, whether it's for developed economies or developing economies. But at the end of the day, is for people like me and you, Nigerians, Rwandans, South Africans, Kenyans, Ghanaians, wherever we are across the continent, what concerns us is the value of the money we have in our pockets and what it can get us. And what that value is right now, it's not really taking a lot of us home, and it's not really bringing home the things that families across the continent truly need.
But I tell you, that's a true reality. That's our reality. All right, Tolu, you can take it from here now.
Thank you so much, Lekan. Lekan will be back in just a bit, giving you the stories we're keeping our eyes on with NC4 to watch. But before we wrap things up, let's just give you a little bit of interesting this is a package. Let me just put it that way. So in recent years, what we found is that the rainforest in Mount Gorongosa has been growing back, and that's because of a previously foreign crop, coffee. Yes, you heard me right. Coffee was foreign to that area. And Julise Sabor, who fled to Zimbabwe to escape Mozambique's civil war, brought the coffee culture and coffee growing back with him when he came back to his country. And now there's a whole development that's happening. Bettina Inwile has the details.
Mozambique fought a bloody war for freedom from Portugal, but after independence in 1975, a civil war ravaged the country until 1992. A smaller conflict later erupted in 2013, ending with a peace treaty in 2019. During the conflict, Renamo rebels who used the mountain range as a wartime base and stronghold exploited the park's natural resources to the brink of environmental collapse.
The relationship between the indigenous plants and the coffee is that coffee does grow very well under shade, and the community has destroyed this Gorongosa mountain. So we have got an objective to reforestate.
The slopes of this Mozambican landmark were once covered with a thriving rainforest. Now, they are marked by deep holes as a result of clear cutting that exposed the soil, leaving it dried up with only shrubs and grasses. However, in recent years, the forest has been growing back thanks to a previously foreign crop, coffee.
Before, this situation here was very, very difficult, the political situation, because we had conflicts around here. We had the Renamo military around here. So with all this, our work was being affected because we couldn't work here because they were fighting against each other, the Renamo and the Frelimo.
Coffee plants take several years to become productive, and so the program in Mozambique also includes food crops so the communities can still support themselves. The World Bank says Gorongosa now has some 300,000 coffee plants, as well as 400,000 cashew trees, 400 beehives, and 300 new jobs.
So what we do with the communities all around the mountain of Serra Gorongosa is that we interest them in reforestation through additional income. Creating additional income through coffee, but also intercropping with other cultures while the coffee is growing. We have production of bananas, and we have a production of beans while the coffee is attaining the first year of production, which usually takes 3 years.
One thing that is worth taking note of is the many challenges in the agriculture sector, some of which are the lack of mechanization and the need for technology transfers. In spite of this, the coffee sector in Mozambique is beginning to show some signs of life. Bettina Nwuba for News Central TV.
So that's what Mozambique is doing to rejuvenate its coffee trade. And before we go on Business Edge, let's take you through the top stories that we are tracking on NC4 to watch. We start by telling you that analysts predict that in the next 10 years, Nigeria's passenger traffic will exceed that of the world aviation sector, growing at a pace of roughly 7%, while the global industry average remains at 5.3%. Sadiku Rafindadi, Director, Commercial and Business Development, Federal Airport Authority of Nigeria, says that the aviation industry is critical to Nigeria's socio-economic development. Now, Angola has trumped Nigeria to becoming Africa's biggest oil producer as Nigeria's output declined the most in May among its peers in the Organization of Petroleum Exporting Countries. OPEC's monthly report of May has said. Let's also tell you that Reda Abdelkader, head of the Egyptian Tax Authority, called on financiers and taxpayers to quickly pay the original tax dues they owe to the state, regardless of their due dates before the end of June. And this is in order to benefit from the facilities provided in the draft law to override daily fees and the additional tax dues that the Egyptian Tax Authority handles, including income taxes, value-added taxes, stamp taxes, and the state's financial resources development fee. We just had to chip that in. Now, Stats SA retail trade figures and retailers' results show that it took civil unrest and a deadly virus to keep South African out of malls, but only for a while. During the last few weeks, several of the country's popular retailers have published their annual results, with all saying that they only recently recovered from the effects of the COVID-19 lockdowns and the civil unrest that caused chaos in KwaZulu-Natal and Gauteng. Finally, let's tell you that President Uhuru Kenyatta and his Zambian counterpart, President Hakainde Hichilema, have signed 6 MOUs geared towards enhancing bilateral cooperation between the two countries. These include MOUs between the Kenya Tourism Federation and the Tourism Council Zambia, and other 3 areas were also considered. And that's it on NC4 to watch. Back to Tolu now.
Thank you so much, Lekan. We'll be wrapping up the show and this week from here. Thank you, as always, for joining us. Conversations that have spanned from South Africa to Nigeria to across the continent and keeping African business, finance, and the economy right in front of you. You're watching News Central. Follow us on social media, download our mobile app, subscribe to our YouTube channel, and of course, watch us on the platforms we are available. In just a few minutes, you have News Central Now coming your way with all the latest stories from here on the continent and outside. I'm Tolulope Adeleru-Balogun. We have a date, Monday, 11 a.m. West African time. We'll be here, so make sure you are too.